Hey everyone, and welcome back to the channel.
If you've ever thought, I wish I could start investing, but I don't have much money, then this video is for you. In 2025, even with just $1,000, you have incredible opportunities to start building real wealth. Stick around because today, we're diving into 7 smart, beginner-friendly ways to invest $1,000 and set yourself up for financial success. Many people believe you need tens of thousands of dollars to begin investing. But that's a myth. The most important thing is simply starting. The earlier you begin, the more time your money has to grow thanks to the magic of compound interest. Even a small consistent investment can turn into a significant sum over time. We're going to break down options that cater to different risk tolerances and financial goals, all while keeping that initial $1,000 budget in mind. So, grab a notepad, hit that like button if you're ready to get financially savvy, and let's jump right in. Our first strategy isn't investing in the traditional sense, but it's crucial for your financial foundation: high-yield savings accounts, or HYSAs. In July 2025, we're seeing some fantastic HYSA rates, with many offering up to 5.00% AP. That's significantly higher than traditional savings accounts, which often pay next to nothing. Why is this a smart first step with your $1,000? Safety. HYSAs are FDIC insured, meaning your money is protected up to $250,000. It's virtually risk-free. Liquidity. You can access your money easily when you need it, making it perfect for an emergency fund. Low barrier to entry. Most HYSAs have very low or no minimum deposit requirements. Use your $1,000 to kickstart an emergency fund. Aim for 3-6 months of living expenses eventually, but starting with $1,000 in HYSA is a fantastic beginning. You're earning interest on your cash, preparing for the unexpected, and setting a solid base for future investments. Next up, we have certificates of deposit, or CDs. If you're comfortable locking away your $1,000 for a set period in exchange for a guaranteed return, CDs are an excellent choice. As of July 2025, we're seeing competitive CD rates. For example, you can find 1-year CDs offering up to 4.40% AP, and even 5-year CDs around 4.20% AP. The benefit here is predictability. You know exactly how much interest you'll earn. This is great for short to medium-term goals where you don't want market volatility affecting your savings, like saving for a down payment or a specific purchase within a few years. Just remember, your money is typically locked in, so make sure you won't need that $1,000 before the CD matures. Now we're getting into direct market exposure. Our third strategy is investing in S&P 500 index funds or exchange-traded funds, ETFs. Why the S&P 500? Because it represents the 500 largest publicly traded companies in the US. By investing in an S&P 500 index fund, you're essentially investing in the broader US economy, gaining instant diversification. Historically, the S&P 500 has delivered an average annual return of around 10% over the long term. While past performance doesn't guarantee future results, it's a powerful track record. With $1,000, you can buy shares of an S&P 500 ETF like VU or SPY. Many brokerages now allow fractional shares, which brings us to another point later, but even without them, you can likely buy a few shares. This is a solid long-term growth strategy for wealth building. Feeling a bit overwhelmed by choosing investments? That's where Robo advisors come in. These are automated platforms that manage your investments for you. For a small fee, typically around 0.25% of your assets per year, a robo-advisor will build and rebalance a diversified portfolio based on your risk tolerance and financial goals. They make investing incredibly simple, especially for beginners. Popular options in 2025 include Betterment, Wealthfront, Fidelity Go, and Schwab Intelligent Portfolios. Many of these have low or even no minimums to start investing. Your $1,000 can easily get you started with a professional-looking portfolio without needing to know all the ins and outs. It's like having a personal financial assistant without the high fees. This strategy is a game changer for new investors with smaller budgets, fractional shares. Historically, if a stock cost $1,000 per share, you needed $1,000 to buy just one. But with fractional shares, offered by many popular brokerages today, you can invest a dollar amount instead of buying a whole share. For instance, if you want to invest in a company like Amazon, whose stock might be hundreds of dollars per share, you can simply say, "I want to invest $100 in Amazon," and you'll own a fraction of a share. This allows your $1,000 to be spread across a wider variety of high-quality, potentially expensive stocks, giving you even more diversification than you might think possible with a limited budget. This next one is often called free money, and for good reason. If your employer offers a 401k match, contributing enough to get that full match is arguably the absolute best use of your $1,000. How does it work? Many companies will match a percentage of your contributions up to a certain point. For example, they might match 50% of your contributions up to 6% of your salary. If you contribute $1,000 and your employer matches, you could instantly double your investment. Check with your HR department to understand your company's 401k match policy. Even if you can't reach the full match with just $1,000, using it to kickstart or boost your contributions is a genius move. This is an immediate, guaranteed return on your investment that you simply can't get anywhere else. Our final investment might surprise you, but it's incredibly powerful: paying down high-interest debt. Think about it. If you're carrying credit card debt with an average interest rate of, say, 20% or even 25% April, every dollar you owe is costing you that much annually. If you invest that same dollar and earn, say, 10% on the S&P 500, you're still losing money overall because your debt interest is higher than your investment returns. Using your $1,000 to pay down credit card debt, personal loans, or any other debt with an interest rate above what you could reasonably expect to earn investing, typically anything over 8–10%, is a guaranteed, risk-free return on your money. It immediately improves your net worth and frees up future cash flow for actual investments. It's like earning a 20% return instantly. Remember, the most important step is to just start. Don't wait for the perfect moment or a massive sum of money. Even $1,000 can be the seed that grows into significant wealth over time.